Australia is heading towards a recession, according to market economists. The global bosses of PwC take over the Australian operations in an effort to stem the crisis engulfing the firm, and Vladimir Putin seriously weakened after an aborted coup over the weekend. It's Monday, the 26th of June, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. What a crazy weekend for news.
Oh, it's been a massive couple of days, hasn't it? And it's just been, and international stories and local stories, it's just been unfolding.
So much going on.
It is. And we've got an interview coming up after the show. One of our favourite guests, Elise Kennedy from Jarden.
Yes, we talked to Elise all about this tech stocks. We start on Wall Street, companies like Nvidia, etc., how they're going. But then we go pretty specific in terms of what the company outlooks are like for in Australia. And these are Australian listed stocks, of course. So if you're interested in investing, you certainly get your own advice, but also listen to Elise and what she thinks about them.
Yeah, it's always a good chat with Elise because she just goes through so many different companies and it's well worth a listen if you're an investor. The main story this morning, though, Sean, the Australian economy is facing a recession with the ongoing hikes in interest rates and the potential for more likely to stop the economy from growing.
That's according to several market economists who are now calling on the Reserve Bank to stop lifting rates. One of the most vocal is AMP's Shane Oliver, who says the risk of recession in Australia is now very high. He says the Reserve Bank has already done enough to slow the economy and bring inflation back to target, and we are seeing clear evidence of slowing demand in terms of falling real retail sales, falling building approvals, slowing plans for growth in business investment, slowing economic growth, and early indications of a slowing jobs market. He wants the central bank to stay on hold for a few months to judge what's going on, but he isn't confident that they'll do it. Westpac's Bill Evans expects more rate hikes because of the resilience of the labour market. While he isn't quite forecasting a recession yet, he says there's a high degree of uncertainty around. Commonwealth Bank's Gareth Aird puts the chance of a recession at about 50%. National Australia Bank's Alan Oster has warned of 2 more rate rises and a heavy hit on the economy. There's plenty more who now think that we are heading for a recession.
Sean, obviously the Reserve Bank is independent, but do these opinions, these external opinions, because these are heavyweights in terms of market economists, does the Reserve Bank listen at all to what's being said?
For sure. They do their own analysis, and there is no better machine in terms of analysing the economy than the Reserve Bank. They have dozens and dozens of economists, and so guys like Bill Evans and Shane Oliver and Alan Oster have been around for a long time, but they're limited in terms of how many people they've got working to predict the economy. They have great experience, of course, and there is no doubt that the Reserve Bank is interested in what these guys are saying. But at the end of the day, the Reserve Bank is independent and will make its own decision based on the work it's done.
All right. So when then is the recession likely to hit?
Well, it's a very good question. Economics isn't an exact science, Michael. You might have worked that one out.
I have gathered that now, yes.
and recessions sometimes actually happen in hindsight. So, for example, the most recent GDP figures suggest there was a per capita contraction in the March quarter, so growth per person. The only reason we didn't actually have a recession was because we had lots of immigration. But if you look at growth per person, we actually went backwards in March. So if this happens this quarter, that would make 2 in a row, and that's classed as a per capita recession. Broadly, though, economists think that people will truly feel the slowdown in the second half of this year and into next year, into 2024, so much so that some actually think interest rates could start falling next year as the Reserve Bank tries to reverse what it's done to boost the economy. So probably in the next 6 months or so, if it does happen.
All right, so recession looking more likely and really not starting the week off on good news, are we?
No, sorry. A very bad start.
Well, what about last week? How did the local markets finish up on Friday?
Well, this doesn't improve the conversation either. And,
oh, great.
I mean, the week started pretty well last week, but it finished really poorly. The S&P ASX 200 closed down 1.3% on Friday to just under 7,100 points. For the week, it was off a couple of percent. Fears of a recession has pushed the oil and gas companies lower. This is more of a global recession fears. Woodside fell nearly 5%. Santos dropped more than 4%. ANZ was off more than 2%. Commonwealth Bank, Westpac, Macquarie Bank, National Australia Bank, they weren't far behind. Other underperformers included UK-based Virgin Money, which tumbled 4% after yet another rate rise in Britain. And Gold Road Resources was off 5% following a production downgrade earlier in the week. One just of interest was Cochlear. Its share price fell more than 3% after British regulator, the Competition and Markets Authority, said the Ear Implant Group's $170 million acquisition of a Danish hearing business doesn't raise competition concerns or good. But the regulator prohibited Cochlear from buying part of that business, which is actually a UK business. This UK bone conduction implants business. It'll have to rid itself of that Cochlear if it wants to buy the Danish business. That sent its share price lower.
All right. And what's happening on international markets?
Well, worth mentioning Bitcoin. It had one of its strongest weeks of the year last year, helped by speculation that proposed exchange-traded funds heralds a whole new source of demand for the largest digital asset. The token was up more than 25% last week. It's nearly doubled so far this year. Smaller coins like XRP, Cardano, and Solana have also done much better. BlackRock last week said it's interested in developing an ETF for Bitcoin. It put an application into the Securities and Exchange Commission. It's just one of a number of US applicants for that. Hence, we're seeing some support for cryptos. In equity markets, all three major Wall Street indices finished lower over the weekend on the back of lingering worries about a recession and comments from the Federal Reserve Chair Jerome Powell that rates may still have to rise. The Dow Jones Industrial Average, the S&P 500 and tech-heavy NASDAQ all fell by around 2% last week. The Aussie dollar fell further against the US dollar over the weekend. It's trading just under 67 US cents.
There's plenty happening, Sean. I think the big question here is my voice going to hold out till the end of the episode? I'm getting progressively worse, aren't I?
Well, you had a very big weekend with the book launch on Friday night. You've got being launched in the US on Wednesday. I think it's all your fault that you've losing your voice, Michael, to be perfectly honest.
I have no one else to blame, but I have so much kind of tea and there's like all these home remedies. And when you work in radio for a while, you hear all of these remedies over time. And the one that kind of seems to work best is tea with lemon and honey.
Ah, really?
Which is actually very, very refreshing. And you put a little bit of ginger in there and it becomes very, very nice, actually.
Lemon and ginger tea. There you go. Who would have thought?
I'm starting to sound like you, aren't I?
Yep, sure are. I'm so proud.
Oh,
so
goodness
proud.
me. All right, we'll be back in a moment with the rest of the day's business news. Sean, the global leaders of PwC have taken control of the Australian business, pushing aside the local CEO who's been acting in the position for just 7 weeks.
In a demonstration of how worried the global partnership is about what's happened in Australia, a Singaporean-based manager will take the reins locally. The firm's global chair, Bob Moritz, said PwC Australia had failed to meet the network's code of conduct and uphold the network's professional standards and values. That is under the previous leadership, of course. He added, its past actions are not representative of the work and behaviours of PwC around the world, and I am deeply sorry to our clients, our broader stakeholders, and our people. PwC Australia has significant work to do, and I'm confident that the steps they are taking with the network support will result in a stronger firm. It comes as the AFR reports that the local PwC business is planning to sell off its government consulting arm, which is where all the problems arose, to a private equity investor, Allegro Funds, for the sum of $1. This is happening while the firm is trying to convince dozens of partners to move into retirement, and it wants to retreat to core auditing, management consulting, and tax compliance work.
Sean, the PwC saga has really hit the whole industry now, hasn't it? Because the partnership structure of the big four consulting firms, Deloitte, EY, KPMG and PwC, and how they operate is all becoming the subject of a parliamentary inquiry with the potential for new penalties for poor behaviour.
So the PwC tax scandal, which, of course, listeners, we remind you once again, it's where the firm used information gained from working with the government to help multinationals avoid tax. That scandal has triggered the inquiry by the Parliamentary Joint Committee on Corporations and Financial Services. Labor Senator Deborah O'Neill chairs the committee. She said the Big Four are no longer operating as envisaged, so a major review of the sector is needed. Now, the inquiry will consider partnership structures, examine gaps in reporting obligations, inquire into fit and proper person requirements and prevailing cultural practices, and also the regulatory regime that partnerships currently operate under.
All right. Now, Sean, the federal government is proposing new legislation, including penalties of close to $7 million for digital platforms failing to address systemic disinformation and misinformation.
Yes, this is getting quite a big run around the world in terms of news, mostly because the government is trying to stop this flood of disinformation on those social media platforms that so many people use. So the government's released a draft framework to empower the Australian Communications and Media Authority to hold digital platforms responsible for misleading or deliberately deceptive information online. Minister for Communications Michelle Rowland said the proposed legislation was aimed at protecting Australians from the growing threat. For the first time, ACMA will be empowered to access documents from digital providers related to misinformation and disinformation on their platforms. The proposed authority would not extend to the content of private messages sent online, but it would in the public sphere. So it'll be very interesting to watch this one.
Now, Sean, Labor has watered down plans to force multinational companies to disclose an unprecedented level of tax information, opting to follow less onerous international standards.
Yes, it's a bit of a win for big business. This one, global fund managers and Australian companies, including medical giants like Cochlear and CSL, warned the Albanese government's proposed country-by-country tax reporting rules. They were supposed to start next week. Those rules risk exposing sensitive commercial data to competitors and undermining cooperation by international revenue authorities, according to the Financial Review. About 2,500 multinational entities with Australian activities would have been required to publicly disclose their approach to tax compliance, their effective tax rate in each country, where they do business, expenses from related party transactions, and a list of intangible assets held by their operations. But amended legislation introduced into Parliament last week basically winds that back quite significantly. The government's also opted to delay application of the new laws by 12 months. So certainly a big win for big business.
And a very late change, isn't it?
Very late, given they've only got a week to go.
Yeah, I can understand delaying the application of the new laws by 12 months. We just need some time to work through this.
Yeah, absolutely.
Now, Sean, last one before we get to international news. The corporate regulator has had a crack at the major insurers, saying they had probably ripped off customers with pricing but made no effort to refund them.
The review into why insurers have failed to pass on at least $815 million in promised discounts or rewards since 2018 was published on Friday. And while insurers are now repaying customers, ASIC has a warning. The industry is potentially making misleading being the operative word here, representations by charging some customers more because they know they won't shop around, while also promising a loyalty discount. The report says that pricing failures since 2018 were most at IAG and valued at $447 million, then RACQ Insurance valued at $222 million, and QBE valued at $90 million. Mostly the failures were inaccurate discount descriptions in documents and errors in the pricing system.
All right, in international news now, big story developing over the weekend, Sean. Russian leader Vladimir Putin's hold on his country has been badly damaged by the aborted coup against him, with the path ahead over the next few months, well, really very uncertain, isn't it?
Sure is. The head of the Wagner Group, Yevgeny Prigozhin, said he had called off the advance of troops on the Russian capital to avoid bloodshed. Kind of ironic, really, because the group is a bunch of mercenaries that kill for a living. Anyway, that was the reason he gave. Fighters had reached within 120 miles of Moscow. The capital's mayor told Russian residents to remain at home. He gave them a day off as they braced for the arrival of these troops. Now, back on Friday, Prigozhin called for an uprising against military leaders. He said he had 25,000 fighters ready to battle the Russian army and called on regular Russian soldiers, including the National Guard, to join his coup attempt. A truce was apparently brokered by the Belarusian president. Putin called it treason over the weekend, but then backed down. He allowed Prigozhin to be exiled to Belarus as part of that truce. The general consensus this morning, Michael, seems to be that the coup has demonstrated the deep cracks within Russian politics, but particularly within the military. And put that next to the failed invasion of Ukraine, Vladimir Putin's position has been severely weakened. He's now under threat, as far as some people are saying. I suppose it makes for a very, very volatile few months ahead, which is quite scary.
Yeah, certainly is. Sean, Facebook and Instagram users in Canada will be blocked from viewing Canadian news, according to Facebook's parent company Meta. This is after Ottawa passed a bill requiring digital giants to pay for such content.
Yes, Google, another critic of Canada's Online News Act, has previously said it's considering a similar move to what Meta's doing. The two tech giants have pushed back against the bill, which aims to support a struggling Canadian news sector that has seen hundreds of publications closed in the last decade. Sounds very familiar. In recent days, the bill has passed the final hurdle in the Senate in Canada. It will become law. Canadian government officials have met with Facebook and Google. They say they're looking forward to further discussions about the new law, but Facebook's parent Meta and Google are taking pretty drastic action by stopping news being viewed.
Sean, for a few days now, people have been talking about the most livable cities, the rankings that were released with Vienna at number 1. Oh, and you're big on pronunciations. Do you say Copenhagen or Copenhagen? I say Copenhagen.
I would have said Hagen, but I'm happy to go with Hagen.
All deep divisions existing within fear and greed. Copenhagen, that came in at number 2. And then you had Sydney and Melbourne at 3 and 4. But what about the other end? What about the least livable cities?
Oh, excellent question. So the Economist Intelligence Unit's Global Livability Index 2023 came out late last week.
That's a ridiculous name, isn't it?
It just goes off the tongue.
Come on, guys. Tighten it up a little bit. Come on. Good places to live. There you go.
So it came out late last week, and post-COVID, Sydney and Melbourne have jumped up the list, done very well. Vancouver was number 5, then Zurich, Calgary in Canada, Geneva, Toronto, Osaka, and Auckland came in at number 10. The rankings consider stability, healthcare, culture and environment, education and infrastructure. Now, some of the big losers, I reckon this is where it gets more interesting. So the British cities of Edinburgh, Manchester and London went backwards. So too Los Angeles and San Diego. But let's have a look at the very bottom end. Coming in last at 173 is, any thoughts?
Somewhere where there's conflict.
So Damascus, capital of Syria.
Oh, that would make sense.
Tripoli was 172. Algiers in Algeria was 171. Port Moresby in Papua New Guinea was 168.
Oh,
way down there. All these cities were actually worse than Kyiv in the Ukraine. That came in at 164. So, you know.
So they're still worse than an active kind of war zone.
Yeah. So it worries me. Port Moresby. That's
pretty confronting because that's
our neighbour.
Yeah.
Anyway, that's the livability index, or the lack of livability, or something like that.
Yes, indeed. All right, interesting story. Now, Sean, up next is the Fear and Greed Daily Interview. You are speaking with Elise Kennedy from Jarden.
All about tech stocks, and particular tech stocks on the ASX, what she likes, what she doesn't. Well worth a listen if you're an investor. I mean, more generally, it's well worth a listen, but especially if you're an investor.
Yeah, it is a really good chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, considering our lead story today was all about what economists think is going to happen to the Australian economy, it's also worth a listen to Fear and Greed the week ahead with Stephen Koukoulas.
Sure is. Very big week this week. Nothing more important than the monthly inflation numbers out this week. If they fall sharply, that will probably influence the Reserve Bank, according to Stephen. He gives us his view on all that sort of thing in that show. Well worth a listen.
Yeah, it's a great one. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 26th of June, 2023. Make sure you're following the podcast. Join us online on Instagram and LinkedIn and Twitter and Facebook. I'm so close to the end. I'm going to make it. Make sure you stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. Grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.